Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Stock futures jump at as the US and China both report substantial progress in weekend talks on the trade war. Ukraine's Volodymyr Zelenskiy says he's ready for face-to-face talks with Russia's Vladimir Putin on Thursday. This as Moscow continues to defy calls for a 30-day ceasefire. Plus, pharma stocks slump in Asia after Donald Trump says he plans to slash US prescription drug prices. We'll watch European drug makers at the open this morning. Well, we are risk off to kick off this Monday morning. You're looking at futures pointing higher on both sides of the Atlantic, reflecting that optimism about those US-China trade talks that have happened in Geneva this weekend. Look at those Nasdaq futures up nearly 2% this morning, off to a flying start. But is the detail going to match the noise? Let's flip the board over to the cross-asset picture, check on how yields are faring at this point. We're at 4.40 on the 10-year yield at the moment because of the expectation that maybe this progress on trade talks means that the Fed can hold off on the rate cuts for now. We've seen strength in the dollar and the flip side being weakness for euro dollar, so we're down 0.2% at a 112 handle as things stand. The expectation as well that you'll have more demand pushing up the Brent price to $64 a barrel currently, and that less need for safe haven assets weighing on the gold price. So $3,277 a troy ounce is where we are. Maybe a little opportunity for a bit of dip buying. But let's go over to Asia now for a look at how Asian markets are reacting to that progress as we hear on US-China trade talks. Over to Paul Dobson.
Hi, good morning, Lizzie. So, Asian markets have taken the news relatively positively, a lot like you've seen for the US markets as well. We have Chinese shares gaining and equity indexes right across the region actually moving positively as well. A little bit of caution and reticence. You know, so far what we have is words. Yes, positive words from both sides, from the US and China, but not much substance to it. The market is hoping that we'll get more today that it can feed off and that it can start to believe in as well. I think the other thing that's been interesting has been the way that the currency markets have been trading this morning, where at the bottom of the stack, the weakest performance, you have the yen and the Swiss franc, as you've been saying, sort of people pulling out of those haven trades. The dollar is kind of in the middle of the pile, and then you have sort of commodity currencies or emerging market currencies or those linked to China's growth as the ones that are outperforming there. So the market's kind of distilled into those three different segments at the moment, which is quite an interesting way to look at it. And I think that's probably the biggest takeaway that we can have from where we are right now. If we do get more positive signs of a trade deal with the US, then these trends that we're starting to see established now, US futures performing well, Treasuries not performing well, gold facing a little bit of a bloody nose, those may be the trends that start to cement and move further depending on what we hear from the US and Chinese administrations about how the talks all went.
All right, Paul Dobson, Bloomberg's executive editor for Asia markets. We thank you as we keep an eye on detail of those talks in Geneva. But now to breaking results from Unicredit for the first quarter. Net income coming in at €2.77 billion. The estimate was for €2.38 billion. So a beat there despite the context being, of course, ECB rate cuts. You're also, of course, looking at the bigger story of this wave of proposed deals that could really transform the Italian banking space. Unicredit saying that M&A will only be pursued if improving bank's standalone case. And so, of course, Unicredit is pursuing Banco BPM in Italy. It's also looking at a bid for Commerzbank in Germany. But Unicredit really want to watch at the market open. The shares have significantly outperformed the Italian benchmark over the past year, and we'll dive more deeply into those numbers with our reporter Charlie Wells later in the programme. Now, back to that US-China negotiation over the weekend. Both sides citing progress following 2 days of talks in Switzerland, which really were aimed at de-escalating the trade war. The Treasury Secretary Scott Bessent says that Washington will share details today, with Vice Premier He Lifeng promising a joint statement.
I'm Happy to report that we made substantial progress between the United States and China in these very important trade talks. We will be giving details tomorrow, but I can tell you that the talks were productive.
The two sides held in-depth exchanges on trade and economic issues of their respective concern. The atmosphere of the meeting was candid, in-depth and constructive. The meeting achieved substantial progress and reached important consensus.
So He Lifeng and Scott Bessent there. And for more now, I'm joined by Stephen Engel, Bloomberg's chief North Asia correspondent out of Hong Kong. Stephen, beyond the spin, what did the talks actually yield?
Well, we're going to be waiting those details. Obviously, the devil will be in those details. And Scott Bessent, the U.S. Treasury Secretary, who led the U.S. delegation, along with Jameson Greer, the U.S. Trade Representative, saying that we're going to get that later Monday. So I would assume between now and this time tomorrow, we will be digesting the details of what substantial progress means and where did they find common ground? Because He Lifeng, seen on your right here, he said they also reached important consensus. I want to know what consensus they possibly could have reached, because they were so far on the issues, so far apart on the issues leading up to this. I think essentially this was a de-escalation of the temperature and an escalation of talks to a senior level. We hadn't seen this higher level of talks directly between China and the United States through this trade war. So could this be a precursor as well if Scott Bessent reports back to the White House that things went really well? Could we see potentially as well, He Lifeng reporting back to Xi Jinping, things went well? Could we see a video or phone call between Xi Jinping and Donald Trump? That would be something I'd be waiting for, in addition to as well the details of what progress they made.
Well, that, of course, would really get this market excited. But in the meantime, Stephen, what's next?
Well, that's the question. We need to digest what kind of details were agreed upon. Where was that consensus? Because, look, 145% tariffs on China, and then China's reciprocal 125% tariffs. Mutually assured destruction on the trade front is not necessarily in the interest of either country. So coming down from those numbers is going to be critical for those two nations to reach common ground. How far? Donald Trump talks 80%. Sources telling Bloomberg ahead of these talks, maybe we'll start at cutting to 60 as a starting point for negotiations. We'll really know tomorrow whether this is just talk or whether they did find some areas where there's an acceptable tariff rate to readjust the trade imbalance between China and the United States. And something Donald Trump has been pushing consistently is more access in China for American goods to help alleviate that trade imbalance, which, of course, surged to a record as far as the trade surplus that China has with the United States. So, again, we're going to be waiting, and I'll be waiting as well. Tomorrow morning, Asia time, we should have those details.
OK, Stephen Engel, Bloomberg's chief North Asia correspondent, waiting for the detail. But in the meantime, it's enough to boost these markets, futures higher on all of this optimism. But while those talks have been happening in Geneva, President Trump has been on his way to the Middle East. He's spending the week there touring the region. Now, ABC News reports that he could receive a luxury jet from Qatar to replace the ageing Air Force One during the visit. And let's bring in Bloomberg Horizon's Middle East and Africa anchor, Jumana Basetchi, who's on the ground for us out of Riyadh. Jumana, this is a big gift, the most valuable ever received by a foreign government. What's on the agenda for Trump's Middle East tour?
Yeah, well, this story broke yesterday afternoon, and it's quite the setup for President Trump's visit to the GCC this week. He will be starting the trip off in Saudi Arabia tomorrow before making his way to Qatar and then eventually ending the week in the UAE. But just on that story that ABC News broke, that the Qatari royal family is weighing donating a jet to President Trump to use as Air Force One, we did get comments from the Qatari media attaché to the U.S. late afternoon yesterday, and they said that the talks are still in discussion phase between lawyers at the U.S. Defense Department and Qatar's Defense Ministry, but nothing has been agreed yet, though President Trump himself did take to Truth Social to suggest that the offer had indeed been made. But it raises a lot of questions on an ethical front and also on a legal front as well. Technically, the U.S. president is not allowed to accept gifts from a foreign government without getting congressional approval first. And so there has been a lot of controversy back home, and many on the other side of the aisle, Democrats, want to turn this into a full-blown investigation. So that is the setup into this week. But it should be noted as well that this was always going to be a week of deal-making as opposed to peacemaking. President Trump is here to talk about investments, about sealing deals, whether it's in artificial intelligence, critical minerals, even in defense. The reports of a $100 billion defense deal being potentially inked with Riyadh. And there is going to be a business summit taking place tomorrow between Saudi Arabia and some key U.S. officials. You've got the Treasury Secretary Scott Bessent heading here. You've got Howard Lutnick, Commerce Secretary, in addition to some major CEOs of American companies, the likes of Jane Fraser, CEO of Cite, and Larry Fink, the CEO of BlackRock. And so that tells you a lot about what expectations are for this week in terms of the ability to get business deals done as opposed to perhaps major geopolitical breakthroughs.
Well, Jemana, speaking of Saudi Arabia, over the weekend, of course, we got the Aramco earnings, as perhaps expected, given the oil price drop. We saw this decline in first quarter profits, cut the dividend by $10 billion. How much is that going to create stress for the Saudi government as it pursues its economic vision?
Yeah, and this is a really good point, and it's worth bringing up in the context of Trump's visit to Saudi Arabia this week. Remember, his first visit was also to Saudi Arabia back in 2017 under his first term. But Saudi Arabia has changed a lot since then, both economically, socially. Back in the day, I think the perception was that Saudi Arabia were, quote unquote, big spenders and willing to splash out money both internationally and domestically. Now, the situation is a little bit different because they are under fiscal constraints. The price of oil has been dropping. OPEC have been holding back production. You're seeing that show up in Aramco earnings. The profit has slipped around 5% or so. Better, I should say, versus some of the other oil companies out there. But on the back of that, they've had to trim their dividends, which is an important source of revenue for the Saudi government. The Saudi government and PIF still own about 97% of Aramco. So with lower sources of revenue coming in and a projected both budget deficit and current account deficit for Saudi Arabia this year, the amount of money that they can spend abroad is going to be smaller than it was in the past, which sort of resets the tone for how much Saudi Arabia can actually commit to in terms of deals and investments in the U.S. this week.
OK, Bloomberg's Jemana Bessent out of Riyadh. We thank you for that update as we're looking at a mini rally for Brent this morning off the back of that trade optimism. Meanwhile, it's a busy week ahead for US macro. So let's take you through what is on the docket. Tomorrow, we have US CPI. We're looking for how much more companies are passing on tariff costs to consumers, how much they feel they can do that without driving businesses away. And we'll see just how much demand is slowing when we get the retail sales numbers on Thursday. Remember, even though the Fed kept rates on hold last week, policymakers still warn that there's a greater risk that Trump's trade policy is going to add both to higher inflation and to higher unemployment. So we'll hear his updated thinking, the Fed Chair Jay Powell when he speaks on Thursday. But meanwhile, on Thursday, we're also going to turn our attention to here in the UK. We'll get GDP numbers, perhaps a gangbuster start to the year as businesses tried to get ahead of that tariff action, but that may well give way to stagnation by March. So this read could be a bit of an anomaly. But as we head towards the trading day, do check out the Daybreak newsletter at DAYB Go on your terminal. Today, they lead on stocks rising on these US-China trade talks. They also have Trump's plans to cut drug prices, and they have Zelenskiy saying that he's waiting for Putin and he'll be there in Turkey on Thursday. But coming up on the programme, Unicredit profit beats estimates, and we're going to break down the numbers for you next. So stay with us. This is Bloomberg.
there is a question whether any deal is necessary because shareholders have a very good deal with us and our standalone strategy, that's for sure.
The Commerzbank CEO speaking to Tom McKenzie on Friday. Commerzbank, of course, just one of the targets of Unicredit, which reported first quarter profit that topped analyst expectations just a few minutes ago. It strengthens CEO Andrea Orcell's hand as he pursues these potential acquisitions. And Charlie Wells is here with more detail. Charlie, how could this earnings report help or hurt the bank's expansion plans across Europe?
Yeah, so that CEO really is a little bit squeezed, right? He came in really wanting to kind of expand Unicredit and is now kind of under pressure from Berlin, of course, because there is that Commerzbank, attempt that he's been pursuing. The finance minister of Germany, the new finance minister, has actually said that he'd like Commerzbank to be independent. So there's pressure on that front. They also just had some blowout earnings. But this is a solid set of numbers. So this gives them some strength. They're pursuing BPM in Italy as well. And, that's come under strain. The government in Rome has used some rules to try to limit this potential takeover. But these numbers are good, right? We're seeing net fee and commission income beating. We're seeing some really strong trading income, but a little bit of softness on that net interest income.
And these numbers from Unicredit wrap up Italian bank earnings season. These were delayed, I think. What read on the broader wave of Italian banking M&A have we got from this earnings season?
We had stronger than expected earnings across the board for a lot of these players who have been involved in this kind of M&A wave. So Mediobanca had a beat, MPS and Banca Generali as well. But what was interesting, I think what everyone really cared about was the commentary on M&A and basically what these executives used in their presentations, what they did. They used these presentations to kind of make the case for whatever mergers they were trying to make. And that is what everyone is going to be paying attention for today, how Orcell communicates the M&A plans.
OK, we'll keep an eye on that. And the shares at the open. Bloomberg's Charlie Wells, we thank you. Coming up on the programme, momentum stalls for the so-called fuel of the future. We'll look at the challenges facing clean hydrogen. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, clean hydrogen had been touted as a key fuel to help the world decarbonise. But enthusiasm is waning and uncertainty from President Trump's tariffs could worsen the outlook. Bloomberg NEF Senior Research Associate Adi Bashiam joins me now for more. Really good to have you around the desk. Why is investment in clean hydrogen stalling, Adi?
Yeah, we found investment dropped to about 50% or so to $24 billion in hydrogen-related investments across the board in 2024. That's just a fraction of the total investment across the energy transition that we have been tracking, which is about $2 trillion last year. And the main reason for that is that clean hydrogen is a lot more expensive than the fossil fuel that it is replacing. Depending on the market, you're looking at a 2 to 5x premium for clean hydrogen. And buyers are just not willing to pay that premium for the product. What is required, therefore, is government intervention to both reduce the cost and encourage buyers to pay a premium where there's a cost gap that likely won't close fully, even with more deployment and innovation.
Yeah, it makes sense when everybody's squeezed. So which regions are leading or lagging then in hydrogen policy and implementation?
Absolutely. Within this small market, Europe and particularly the European Union probably has the most complete policy framework with both subsidies on the production side to reduce the costs and incentives on the demand side in the form of quotas to encourage buyers to pay a premium. In fact, we saw a tripling of electrolyzer sales. Electrolyzers are the equipment that you need to make green hydrogen from renewable electricity and water in Europe in 2024. Next on that list is China, where we have seen government policies and government programs encouraging state-owned companies to invest in several key sectors, including hydrogen, even if they are loss-making. In terms of lagging industries, lagging countries, we really see the U.S. and the rest of the world. Despite tax credits passed under the Biden administration, we see very little investment in the U.S. so far.
Yeah, so how much of this is because of Trump's tariffs? Is that stopping U.S. hydrogen projects moving forward now?
Absolutely. I mean, U.S. hydrogen projects are in a bit of a holding pattern right now. Trump's tariffs worsen already really bad project economics further, and in our view, they're unlikely to have the intended effect, which means that even with tariffs, particularly on China of 145%, we think that Chinese-made equipment, Chinese electrolyzers, will still be cheaper than US-made equipment in the US. And at the same time, because there's low demand in this industry and there are tariffs, we see little investment in the US and US manufacturing to build out more electrolyzer manufacturing capacity. So in both ways, tariffs really worsen the economics. But what's really key here is the tax credits and the uncertainty around whether the Trump administration will keep these tax credits in place.
So if I want to invest in this space in the rest of 2025, what should I be watching for?
Absolutely. As I mentioned, there are several key policies that are coming up and that will be required to make investment decisions viable. We are watching a number of auctions. Probably the biggest one is running in Japan right now, where the Japanese government in the second half of this year will pick auction winners under its $19 billion Clean Hydrogen Contracts for Difference program. That is also open to exporters like US projects, Middle Eastern projects. So we'll see a number of investment decisions go forward there. And second, really, in Europe, we see more and more countries implement quotas on its industries to increasingly use clean hydrogen. So we'll see a lot of European projects targeting countries with quotas, where there's a willingness to pay a significant premium for clean hydrogen going forward.
Okay. Bloomberg NEF Senior Research Associate Adi Bashem, we thank you for that update and analysis. Now, to some other stories making news this morning. Bloomberg has learned that Spain's government is open to considering a tie-up for Banco Sabadell with another local bank in order to counter an unsolicited bid from BBVA. The Spanish administration has repeatedly said that BBVA's acquisition of Sabadell would be bad for competition. And in other news, Bloomberg has learnt that Stellantis is nearing the end of its complicated search for a new chief executive, with America's boss Antonio Filosa emerging as the leading candidate. Though, according to the source, a final decision hasn't yet been made. The company initially told investors when CEO Carlos Tavares was ousted in December that its board would appoint a new leader in the first half of this year. And CATL has started taking orders for its Hong Kong stock offering, which looks set to be the world's biggest listing this year. The Chinese EV battery giant is offering shares at a maximum price of 263 Hong Kong dollars as it seeks to raise around $5.3 billion US. Meanwhile, Bloomberg has learned that CATL is planning to limit US participation to investors with offshore accounts, excluding domestic mutual funds. So those are some of the stories that we are watching this morning. You're looking at futures pointing higher on both sides of the Atlantic this morning. You're up nearly 2% on Nasdaq futures and also 0.9% for Euro Stoxx 50 futures because of the optimism around those Geneva trade talks between the US and China. Is that noise going to translate into detail? We await to see what's actually come out of this and whether this stock rally can maintain itself as trade opens. Meanwhile, you are looking at every other asset class, as you would expect, reacting to this news. Brent crude up, for example, gold down as traders let go of the need for the safe haven. But we're also going to be minding all of the events this week on the docket. We have Trump in Saudi Arabia today, US CPI numbers coming tomorrow, Walmart earnings on Thursday. We also have US retail sales numbers on Thursday, the Fed Chair Jerome Powell speaking on Thursday as well, and on Friday, the US University of Michigan consumer sentiment data. So plenty ahead this week. We'll be across all of it for you. But coming up on the programme, we'll speak markets with Lauren van Biljon, Senior Portfolio Manager at Allspring Global Investments. That's next. This is Bloomberg. Happy Monday, good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Stock futures jump as the US and China both report substantial progress in weekend talks on the trade war. Ukraine's Volodymyr Zelenskiy says he's ready for face-to-face talks with Russia's Vladimir Putin on Thursday. This as Moscow continues to defy calls for a 30-day ceasefire. Plus, pharma stocks slump in Asia after Donald Trump says he plans to slash US prescription drug prices. We'll watch European drug makers at the open this morning. Well, a very good morning. Welcome to the programme. If you're just joining us, you're looking at futures pointing higher on both sides of the pond this morning. A risk-on start to the week because of the positive noises that we're hearing out of Geneva over the weekend. These US-China trade talks, we're still waiting for the details. But look at that NASDAQ futures listing there, up about 2% as things stand. Meanwhile, if we flip over to the cross-asset picture, you've got the 10-year Treasury yield now up 3 basis points at 4.40%. The expectation perhaps that the Fed isn't going to have to cut rates as fast if you've got this progress on the trade war. The dollar climbing, as you would expect. Euro dollar, therefore, on the back foot. Brent crude at $64 a barrel, up because of the expectation of more demand if the trade war can be pared back. And gold losing a bit of its steam, a bit of its shine as traders let go of the safe haven. An opportunity, perhaps, for a bit of dip buying. $3,275 a troy ounce is where we trade currently. But let's get into the market analysis now. We've got Lauren van Biljon, Senior Portfolio Manager at Allspring Global Investments, with me round the desk. Really good to have you with me, Lauren.
Yeah, good morning.
The market's very happy this morning. Is it getting carried away with itself on the trade optimism?
I mean, while there's some good news, let's enjoy it. But I wonder if over the course of the day we won't see this initial reaction starting to fade a little, because there's just not a lot of detail there, is there?
No, but so what do we need to see to sustain this when it comes to the detail on tariffs?
I think we've got to see, a plan. We've got to see concrete steps. We've got to see a timeline for how it comes in. And let's not forget that end rate, of course, of tariffs as well is going to be what drives this.
Yeah.
Even if Chinese rates are halved, even if they're a third of where they are right now, that is still a substantial rise from where we were at the start of the year.
Yeah, and of course the question as well, how long are they going to be there? So when you've got trade dominating the sentiment as it is at the moment, does it even really matter what the Fed chair says on Thursday, what the eco data does this week?
I think it always matters, but it's certainly a very headline-driven market, isn't it? And I think you are seeing some fatigue creep into decision-making and into trading. Or maybe fatigue's the wrong word. Maybe it's sort of that appropriate degree of delay, right? You can't react to every headline because you might just get whipsawed, sort of the next one. So I think a little bit more sort of delay coming in between headline and action, which might be healthy in the longer term.
Well, that's interesting. So would you say that we're past peak uncertainty?
Well, past peak tariff. I'm not sure about past peak uncertainty.
I mean, as we look at all of this data this week, when are you expecting, or are you expecting to see the tariff pain show up in the hard data? That seems to be what the Fed's waiting for in order to cut.
That is the absolute key, isn't it? Because soft data has been so weak and hard data is just not showing that same reaction. And that degree of divergence, it can't maintain. So we have to get back, those two have to converge somewhere along the line. And is it the soft data that improves? Is it the hard data that worsens? So far, all the US policy has been very much on the sort of the downside growth risk, right? That's the, the Doge cuts, the tariffs coming in. So we've had a lot of that news come out. So maybe going forward, depending on sequencing, maybe it's good news on growth into year end.
I like your optimism, Lauren. I mean, we have had a recovery in US stocks since tariff day. They're actually back to where they were before tariff day. But then still investors are talking about capital flight from the US to, assets elsewhere, German debt, for example. Do you see that continuing, even if we are perhaps past peak uncertainty, or at least past peak tariff, as you say?
The US dollar as a percentage of reserve assets has been slowly declining for quite a long period of time. That could continue. Maybe that accelerates a little bit. But the US market is always going to be of huge importance to the global economy. But maybe what all this uncertainty and all this upheaval means, all these frictions that are being brought into the world economy, maybe that means investors have to stay a little bit closer to home.
Well, I mean, I talked about the stock rally, or the recovery, shall we say, but what about the dollar? When does that get back to the pre-tariff day, so-called Liberation Day level?
Liberation Day levels. That's an interesting one, because the US dollar has had an incredible, decade of outperformance. And on trade-weighted or inflation-adjusted levels, it is still expensive. But investors came into this year with a huge overweight to the US dollar, which is now back to neutral, if not slightly underweight. So maybe it's a little bit stronger in the dollar in the short term. 110 versus euro doesn't look out of the realms of possibility. But I'm not sure we see much more than that.
OK, interesting. Well, if we turn to the European side of the equation then, we've had hawkish sounds coming from Isabel Schnabel over at the ECB in an interview with the Financial Times this weekend. She's worried about the inflationary impact here in the euro area of the tariff war. Is that how you see things? Because not everyone does.
It gets us back to that sequencing issue, doesn't it, right? Which comes first, the growth impact or the inflation impact? And how do we quantify either of them? Which gets us back to that same word of uncertainty. And so what else can a central bank do, especially one like the ECB, but play up or at least highlight those uncertainties that are known, right? And so maybe it's a slower pace. Maybe it's more hurried when you've got data, so bigger moves, but sort of left to later in the cycle.
But when you think about European debt, German government debt, for example, Merz had this rocky start. Is it appealing to you?
It's always on a relative basis. For all of our Allspring fundamental strategies, right, comes down to the relative value argument. So it depends what it's up against, I suppose, is the slightly less clear-cut answer. We did have a position in German government bonds, which we took some profits on just in April, after all the upheaval. Europe's an interesting place. There's a lot of questions, but also a lot of potential. And it'll be fascinating to see how it plays out next couple of quarters.
Yeah, I mean, specifically if we just turn to the UK as well, surprisingly hawkish, perhaps, messaging from the Bank of England last week. Were you surprised?
I was surprised, because I thought coming in, it was a really good setup for a lower inflation forecasts, for, a slightly more dovish tone, or at least a slightly more accommodative tone going forward. But, yeah, the market's taken it as a very hawkish cut. Fascinating to see that degree of divergence, or of disagreement at least, within the voting.
Yeah, three-way votes.
Three-way votes. Really interesting. So that even policymakers, with all that data at their disposal, aren't quite sure how things are going to be playing out.
Yeah, I mean, I wonder whether that signals chaos or just as a mark of the uncertain times that we're in. I mean, in terms of that market reaction that you referred to, do you think that traders have taken it more hawkishly than the bank intended? Have they priced out too many cuts?
That's possible. And maybe it was made worse because it came out on the same day as the announcement of the US-UK trade agreement, or at least the bones of a trade agreement. So perhaps that exacerbated the move. I still think that sort of 5 to 10 year area in gilts is attractive.
And does that trade agreement with the US, or trade framework, pact, whatever we're calling it,
trade skeleton,
how much does that add to your optimism, the appeal of UK assets at this point? Because we've also got that India deal as well. Yeah,
India deal. It's good to see. Coming out of Europe, one of the promised benefits was the ability to negotiate quickly and on a bilateral basis. It's nice to see that playing out in some degree.
Post-Brexit Britain open for business?
Absolutely.
All right. Lauren Van Biljon, Senior Portfolio Manager at Allspring Global Investments. Always good to have you around the desk. Thank you. Now, shares in Asian drug makers are lower this morning after President Trump said he planned to slash US prescription drug costs. In a social media post, Trump said that he will sign an executive order today mandating that Americans pay no more than people in countries that have the lowest price. Let's get more now with Katya Dmitrieva. Katya, good morning. What more do we know?
Well, we know that this would be a very big policy indeed in the U.S. This is a key promise from President Trump during both election runs, in fact, in 2016, as well as his most recent campaign. And the idea of this, which, of course, we only know from his Truth Social post, so still a lot of questions. But what we do know so far is this would revive sort of a most favored nation approach to drug pricing. In other words, the U.S. or a U.S. consumer would be paying essentially the same as the lowest price available elsewhere, at least on the face of it. So you think about buying a vial of insulin in Turkey for a couple dollars, it should be the same price for American consumers. Now, a lot of questions as well about how this would apply alongside tariffs. There were pharmaceutical tariffs announced recently that would, of course, potentially cause shortages and drive up prices. Also, how it would be implemented, because Republicans themselves are not very favorable to this. They don't really like the most favored nation approach, as well as pharmaceutical companies as well. As you mentioned there, a lot of pharma stocks reacting very negatively to this news.
Yeah, particularly already in the Asian session, the likes of the Japanese drug maker Chugai Pharmaceutical, Takeda Pharmaceutical as well, losing about 5% earlier on in trading. Katya, just talk us through which other stocks we ought to be watching. Of course, the European Open could feel a bit of this as well.
Yeah, of course. The European stocks, pharmaceutical stocks in particular, we had in the Asian session, of course, some powers at play there, because there are some positive developments in the U.S.-China trade talks, which kind of gave a lift. But certainly European stocks, U.S. as well, when things get underway. Trump is supposed to be signing this, he said, Monday morning. So that's in a few hours when the U.S. wakes up. And we'll also be looking for more details, whether this would look like his previous most favored nation approach, whether it would apply to Medicare reimbursements, whether it would be narrow, for example, would only apply to things that were dispensed in doctors' offices or more broadly in hospitals. So still a lot of questions, but certainly we should be watching those pharma stocks when they open.
Indeed, we will. Bloomberg's Katya Dmitrieva, we thank you for the update. Bad news perhaps for Pharma, but optimism elsewhere in the futures picture as traders digest the noises coming out of those US-China trade talks in Geneva over the weekend. That risk sentiment also possibly boosted by the progress that we're hearing out of Ukraine, and we're going to dive into that next. Volodymyr Zelenskiy challenging Vladimir Putin to direct talks on Thursday after a weekend of frantic diplomacy aimed at ending the war in Ukraine. We'll bring you all the details next. This is Bloomberg. A very good morning. Welcome back to Bloomberg Daybreak Europe. It's just coming up to 6:45 a.m. in London, and we have some breaking news. Japan's 30-year bond yield rising to its highest in almost 25 years. This as we have an auction tomorrow and some jitters around that. Also, the weaker yen and the JGB rate hike delays. So you're looking at the yen as well, currently weaker, 0.5% at 146 per dollar. But keep an eye on that 30-year yield. Back to the geopolitics now. President Trump's effort to secure peace in Ukraine is reaching a decisive moment, with Ukraine's Volodymyr Zelenskiy challenging Vladimir Putin to engage in talks this week. Zelenskiy said that he'll travel to Istanbul on Thursday, where Putin has proposed direct negotiations. It follows a weekend of frantic diplomacy that saw the leaders of Germany, France, Poland and the UK visit Zelenskiy in Kyiv. Bloomberg's Oliver Crook has been across all of the details. He joins us now from Brussels. Ollie, just get us up to speed with the latest.
Yeah, Lizzie, really a spectacular 48 hours in terms of diplomacy, and the ideas of exactly what the kind of talks would be between whom really evolved over that period of time. And as you say, Lizzie, it began in Kyiv, where you had that visit by Keir Starmer, Emmanuel Macron, Friedrich Merz and Donald Tusk meeting with Volodymyr Zelenskiy and trying to discuss and hammer out this concept that starting today you'd have a 30-day unconditional ceasefire. Apparently they got Trump on the phone. He was on board with that plan. They put it out. They put that ultimatum out to Putin, who basically rejected it last night in a sort of rare press conference where he came out and said, you know what, listen, we're not interested in having a ceasefire, but we are open to beginning to have very serious, he says, serious negotiations without any preconditions. And he suggested the venue for that to be in Turkey on Thursday, on the 15th. We then heard from Trump shortly thereafter coming out on Truth Social saying that basically Putin was not interested in having a ceasefire, but that he was interested in having those talks on Thursday, and that Ukraine should agree to this immediately. At least then they'll be able to determine whether or not the deal is possible. Here I'm quoting from his Truth Social. And if not, the European leaders and the U.S. will know where everything stands and can plan accordingly. He said, I am starting to doubt that Ukraine will be willing to make a deal with Putin. And in response to that, Volodymyr Zelenskiy made it very clear that he should not be doubting him and his will, because we heard from Zelenskiy coming out very shortly thereafter on X saying that there is no point in prolonging the killings, and that he, the president of Ukraine, will be waiting for Putin in Turkey on Thursday personally, and that he hopes this time the Russians will not look for excuses. So what we are seeing here, Lizzie, is sort of the fruits of the Trump pressure approach, right? And we certainly have seen Zelensky learn his lessons about saying, listen, I'm not going to push against the United States. I'm going to go with the flow with the United States and what they want, and I'm going to go all in and say, listen, I will be on Thursday in those talks. I think it's very difficult to imagine a scenario in which Vladimir Putin will agree to be there himself in order to have those negotiations. But again, this is all to demonstrate to the Trump administration that Ukraine is on board with their plan, and that they will do everything in their power to facilitate these discussions and to get the sort of ball over the line in terms of beginning to make these progress in terms of ending this war.
But surely the consequence of that, Ollie, this big talk, is that now Europe's got to walk the walk. If Europe is saying it's got US support for these sanctions, when's the crunch point that they need to show if this is just an empty threat?
So this is the problem. We heard a lot of things secondhand over the weekend from a number of the leaders. We heard from Macron, we heard from Zelensky, and at the end of the day, you really just can't really take anything anyone says about what Donald Trump thinks until you hear from Donald Trump himself. And throughout this entire campaign, we've had a lot of pressure exerted from the White House onto the Ukrainians. We've had intermittent pressure exerted on the Russians as well. If, though, there is a situation in which the U.S. sees the Russians as being the obstacles to progress, we now have a bill, we understand, we saw a draft of this that's been put forward by Senator Lindsey Graham that promises new so-called, and this is quoting Graham, bone-crushing sanctions on the Russian economy. And Lizzie, what would be interesting about this is it's a slightly different approach from the other sanctions we've seen on the Russians, where this would actually be targeting third-party countries that still buy Russian oil and gas and uranium and the like, basically saying that if those countries continue to buy those in contravention of a new sanctions, that the United States would impose 500% tariffs on those countries, i.e. basically closing the tariff flow, the trade flow between those third-party countries and the United States. So again, we now begin to see an outline of kind of what the stakes are here if the Russians are seen to be the problem. But again, at the end of the day, we're not very clear on what the proposals would be of any peace negotiations. We saw a draft proposal last month that basically looked at freezing the war in its tracks right now. But again, this is all trying to pushing people to the negotiating table in the hope that the Trump administration will be able to get these sort of outlines of how a peace proposal could get progress forward and eventually end the war.
But to that point, is it not the case that the US would already see Russia as holding back the peace deal when you have the US willing to freeze the conflict as things are, settle with where the occupied territories are at the moment, but Russia's still pushing to take territories that it doesn't even occupy at the moment, 4 regions of Ukraine?
Yes. Absolutely, and I think that this is the sort of U.S. tack, is to basically see how difficult they're going to be in these negotiations, or if they're actually being serious about coming to the negotiating table. Again, Lizzie, you make that very point. Those who are supportive of Ukraine, and probably from the perspective of most Europeans, that basically what the U.S. and their original proposal, their draft that they put out last month, was already giving quite a lot to the Russians. As you mentioned, I'll just go through what that proposal included. As you said, it's freezing the battle lines where they stand, that the U.S. would actually recognize potentially Crimea as part of Russia, that basically the path to NATO by the Ukrainians would be barred. There would be potential security guarantees from the United States. We're not very clear on what those potentially could be. And then also eventually lifting the sanctions on Russia longer term. This is basically what was in some of the draft proposals that we saw already. As you say, Lizzie, to those who support Ukraine, that is seen something close to not total surrender, but giving a lot of concessions. Now, if the Russians are still not willing to come to the table with some of these on the outline, this will give the Trump administration the sort of confirmation potentially about what the sort of obstacle to peace will be. But again, we'll have to see how these things go. I think it'd be very interesting to see how Putin responds to this. I think probably more likely what you see on Thursday are high-level delegation meetings at the diplomatic level, potentially between Ukraine and Russia. But again, if you were to see Vladimir Putin, Volodymyr Zelenskiy to meet in person in Turkey, that would certainly be very welcome by the U.S. administration and seen really as validating the technique that they've put forward here.
OK. All eyes on Istanbul on Thursday. Bloomberg's Oliver Crook in Brussels for now. We thank you for that excellent reporting. Now, to some other stories making news around the world. The US and Iran will continue talks over the Islamic Republic's nuclear program after discussions in Oman described as encouraging by Washington and as difficult but useful by Tehran. A senior Trump administration official says that they agreed to continue working through the technical details with another meeting to be scheduled soon. However, the US envoy Steve Witkoff reportedly says that Iran must dismantle its uranium enrichment program, something Tehran has rejected as a red line. Elsewhere, Hamas says that it'll release the last living American hostage that it holds in Gaza after renewed talks with the US in recent days over a ceasefire with Israel. The militant group says that releasing Israeli soldier who is a US citizen is a step towards a new ceasefire agreement. Hamas didn't say when he would be released. Meanwhile, Israel has endorsed a US plan by President Trump for a phased resumption of food distribution to Gaza's civilians. And a ceasefire between India and Pakistan appears to be holding after 4 days of clashes. India says it's fulfilled its objective of eliminating what it calls terrorist camps in Pakistan, with dozens of suspected militants killed. Meanwhile, Pakistan's military says that war between the nuclear rivals would be, quote, sheer stupidity. Tensions had escalated further on Saturday with drone and missile strikes on military sites before both sides agreed to a truce. Well, those are some of your top stories this morning. Plenty more coming up on the programme. This is Bloomberg.
Well, right now, there's a lot of uncertainty about what's happening with trade policy. Right now, the economy's in a really good place in the U.S. Unemployment's in 4.2%. Inflation's 2.3%. The other indicators show we're still a pretty solid economy. So right now, we have time.
So that was an exclusive conversation with New York Fed President John Williams. Still optimistic as we wait for the pain from this tariff war to show up in the hard data. And we'll get a load of that this week. We kick off with US CPI numbers tomorrow for April. You can see on a monthly basis, we're expecting a bit of a bounce. But if we flip the board, you can see over the last 3, 6 and 12 months, inflation is actually easing, but not quite to that 2% target yet. Now, the question is, with all of this tariff pressure, why is the increase in inflation so moderate for now? Is it because of demand slowing? Flip the board, we get retail sales numbers on Thursday. Is it that businesses just don't feel like they can pass it on yet? We're still below this post-COVID bounce. Well, up next on Bloomberg TV, the opening trade. Kriti Gupta and Guy Johnson will take you to the market open. So stay with us. This is Bloomberg.